Good morning, this is Will coming to you live from Nasdaq's global headquarters in New York. Welcome to the second edition of Nasdaq Advisory Live, brought to you by Nasdaq Corporate Solutions. Thanks for joining us today. And I'm joined by Adam Lazarus, an IR advisory analyst with Nasdaq Advisory Services. Adam, thanks so much for joining. To kick things off, give us an update on market activity from this week.
Sure. Well, Monday started off with the largest decline for 2017 for the Dow, Nasdaq, and S&P 500, and that comes on the heels of some executive orders signed over the weekend by President Trump. In the near short term, we're likely to see airlines, leisure, and the tech sector go lower, and we're likely to also see the US dollar go lower for the week. However, for the month of January, we did see all three major indices finish the month of January higher. On the economic front, we had consumer confidence holding steady after hitting a 15-year high back in December. Consumer spending, U.S. home sales, and the ADP report also came in higher than expected. Besides the executive orders by President Trump over the weekend, the Fed decided to hold interest rates steady, which was priced into the markets after we recently had an interest rate hike back in December. Now, the Fed has mentioned that they expect to raise interest rates 3 times in 2017. However, back in late 2015, the Fed also said that they would raise interest rates 4 times in 2016 and ended up only doing it once back in December. Now, the Fed statement also talked about when they think they're going to raise interest rates, and it was pretty vague. And it also didn't mention anything about potential uncertainty. They also were they didn't talk about guidance moving forward for normalization of their $4.5 trillion balance sheet.
Great. Adam, I appreciate that update. Let's switch gears a little bit. Let's go to corporate earnings. Any major updates on that front? I know it's been a busy earnings season so far.
Yeah. So we've now had almost half of the S&P 500 report earnings. So as of this morning, we've had 66% of companies have beaten earnings, while 47% have beaten revenues, according to Thomson Reuters IBES. Now, this is below the previous 4-quarter averages on the top and bottom line. However, for earnings, they are higher than the historical average. We also saw for the retail sector, one of the larger names in the sector really come short, disappointing the analysts. And because of that, they tumbled and brought the rest of the sector down lower. That's why earnings season is so important to watch, because if one company really comes up short, it could affect that sector for the day.
Great, thanks. That's a very important recap. Thank you. Looking ahead to next week, are there any significant economic calendar items or other events that our viewers should take note of?
Yes. Well, we still have, for this week on the economic calendar, we have unemployment rate, non-farm payrolls, and the average hourly earnings, which are due out tomorrow morning at 8:30 a.m. Since the ADP employment number was higher than expected, there is potential for these numbers to come in more on the higher side. As for economic data for next week, it's a pretty quiet week for market-driven data. We have Michigan sentiment, which is scheduled for Friday. Earnings season will continue. We still have another 17 in the S&P 500 due out later this week, and another 80 companies in the S&P due out for next week, in addition to 2 Dow components also scheduled to announce earnings next week. And Punxsutawney Phil unfortunately saw his shadow this morning, so we're likely to have 6 more weeks of winter.
That's right. It is February 2nd, after all, Groundhog Day. Adam, well, thank you very much for that update on the markets and also on how long winter is expected to be, thanks to Punxsutawney Phil. I appreciate your time today. And thank you to our viewers for tuning in. We look forward to seeing you back here next week. Be sure to follow Nasdaq Corporate Solutions on Twitter at MyCorpSolutions. Visit our blog. That's at business.nasdaq.com. where you'll find the latest research report from Nasdaq Advisory Services on the confluence of shareholder activism and socially responsible investing. Thanks so much. Have a great weekend.